We talk about a lot of things in today's movie, such as fighting the shorts. First, let's look at this. Since AMC is still gaining shares at $500 per share, I'm eager to buy more. This is because the company was still gaining shares when prices were in the tens of thousands or even hundreds of thousands of dollars per share during MOAS. How apes feel about AMC and how much we value it. That's pretty much it for this. Even at $500, we know that the real price of AMC should be at least $500. We also look at the value of where we are now compared to the past and the basics of the market. At that point, we need to let the market decide where AMC should stand. When we let real volume happen, we let both buy and sell volume have an effect on exchange. We will figure out where AMC should go if we see that dark pool traffic is going down. In all of these places, these coins and synthetics work together to stop AMC. So, even though it costs $500, AES knows that AMC is the only one showing where its base should be. It also doesn't include the squeeze. We also talked about how the squeeze price will definitely make AMC go over 1,000. That's why it's a good deal. It just goes to show how little AMC is valued. The price of AMC right now is $2.8585. Additionally, we have not seen many big price changes for AMC in the past 5 years. The only thing it does is show how many shares are hidden. In reality, it just shows how big AMC's potential is. So, as apes, we know what's going on, which is why you always see apes backing AMC. Of course, we also need to think about the fact that we now have a real way to deal with these jerks, at the very least a cash reward. We are also looking at the concepts of MC's future direction right now. The OBV is mostly shown in this picture, which we show a lot on this channel. Because of this, let's split this into two parts. To begin, let's talk about the OBV. We just talked about how AMC isn't worth enough, and how it should be at least $500. This is because as AMC went above $300, it became clear that most people who had bought shares had kept them. In this way, the OBV is about the same level as us, while we are much higher. People have bought shares in AMC at better prices, and those who bought along the way have never sold. This shows that AMC is undervalued and being pushed down. That's how much AMC should really be. If that's the case, we've shown more than once that there is a link between the OBV and prices. It is normal to see that when the price goes down, the OBV also goes down. The biggest reason why OBV stays the same is when looking at AMC. We've talked about why AMC should be higher because it shows that no one has sold any shares, which surprises us. Of course, the next subject is about the basics. The possible benefits of AMC are a big reason why we keep working on its principles. The collapse of AMC is definitely one way that shorts can go, which is what we talk about first. So, if AMC has very good fundamentals and no signs of going bankrupt, it's easy to see why the shorts are still stuck and why they will keep putting money into putting down AMC. But, as we already said, the MOA's price will keep going up as they spend more in AMC because they need to cover the cost of making more shares. The next part of the basics talks about what AMC can do when their cash flow gets better. It's clear that they're making money because their sales go up and they do all of these other things that help them. Of course, one of these is giving out profits. For those who don't know, short sellers are the ones who have to pay first when a company gives out a bonus. These profits are what they have to pay out to make up for the shares they have shorted, because they have made billions of AMC synthetics. This is why we talked about it. When AMC starts paying dividends, which will definitely use up all of their cash, all of those billions of shares will have to be paid for. Now you can see that AMC seems to have made up a story to criticize Marvel Pictures. It's clear that these works are very bad for shorts' goals. They make a huge amount of money and people. If they can hurt Marvel, they might be able to hurt AMC too. I will not give in to their pressure. We just went over the basics of AMC, as this shows. The last thing that makes AMC strong is its solid office and movie office. We'll talk more about this later. But these constant FUDs have definitely done this in more than one way. But they have criticized Marvel films and might do so again. Of course, everyone has their own thoughts. It's okay to not like a Marvel movie or a Marvel movie. One of the most important things we've seen is the push to get people to watch films instead of nothing. That's AMC's plan. If you can get people to stop going to movies, the box office will go down, which will hurt their main business. Streaming sites are always going after AMC. A lot of people who use Netflix and other services say that the movie theater business is dying. Now is the time to stream. That's what the plan is for. We told them that they do this to keep AMC customers away. You already know this. Don't say anything that will make AMC angry. Instead, say something that won't. Have you noticed that this talks about FUD instead of what I talked about before? This is the first time I put on this channel. Even though I haven't talked about it on this channel, I think everyone should think about it, because all of these FUD pieces say that AMC is crazy about pushing stream over, bankrupt, etc. And you can see that they keep saying that AMC will get nothing. Prices don't go up, down, or discover new prices. But they never talk about the main reasons why AMC is going down. What stops the AMC price from being found? You know that the 85% dark pool isn't talked about. No one is talking about the billions of AMC shares that are still out there. There was no word of billions of FTDs. There is no talk of billions of synthetics and trades. These are not their goals. That is, not doing the shows that they are guilty. That's why they stay away from these things. That's why I said they often use FUDs to convince people. When prices go down, the truth comes out. In January 2021, real buying did better than coercion. When GME hit 483 and the system crashed, clearing houses asked for billions of dollars and free security. No more trading. Overnight, the rules changed. They must stop it from happening again. What happened to Robinhood shows that AMC and GME are in the same situation. There wasn't enough collateral, so AMC took most of it. One more time, this is not a complaint of GME. We always said that GME and AMC are on the same side. We are, however, definitely going after short sellers as a group, and we have mutual short sellers. Power is talked about, though it's risky to talk about how AMC and GME can force short sellers to hold trades in order to change the rules and put up billions of dollars in collateral. So now you know that the margin depth has reached its biggest point ever, which is 1.08 trillion. Some people who sell short cover AMC and GME. This is still true even with OBV, FTDs, swaps, and other proof. There's $1 trillion in margin debt alone. Yet another big problem. Increasing their gap should show how desperate they are and how hard they're working to stop AMC. Besides that, these deals are making a big difference. We also talk about swaps for AMC and GME. Cover swap companies with more than $8 billion in total swap exposure, but set aside more collateral to meet